Hello, everyone. This video is on Chapter 5, Customers and Sales. Let me go ahead and share my screen. Okay, Chapter 5, Customers and Sales. The learning objectives of Chapter 5 are the following. We're going to learn how to navigate sales transactions. We'll be using the navigation bar, the new icon button, and the workspace. We'll be talking about customer lists, where you can update the customers before entering the transactions or on the fly while you are entering the transactions. We also have this thing called projects, and that's just a way to keep track of how profitable certain segments of our business are. Then we'll go over the product and service lists, where we'll have like inventory items, non-inventory items, service items, and then a combination of both through the bundle. We'll record sales transactions using sales receipts. And if you recall, sales receipts is for cash sales. So we will create the sales receipt. We'll receive the cash or check, whatever it is, and then we'll march it down to the bank and put it in the bank as a bank deposit. Also, we will record sales transactions using invoices. Invoices are credit sales, sales on account. So if you perform a service or you sell a product and you invoice that customer and he says, "I'll pay you later," right? That's what's going to happen. So we're going to create the invoice so that we can bill our customers. And then probably 30 days later, we're going to receive the payment of that invoice. Then we'll march it down to the bank for a bank deposit. Okay. So that's kind of what we'll be doing. As far as our SAT nav illustration, notice that we're focusing on transactions and specifically customers and sales. There are 3 different ways to navigate entering sales transactions. First, you can use the navigation bar, the new icon button, and then the workspace. And we'll go over each. To use the navigation bar, we simply go over to the side, go to sales, and then you'll see all sales tab. Click it, and I'll put you here. And then you'll just enter the sales transaction that you want. If you're going to bill a customer, you provided the service, let's say, and he's going to pay you later, you're going to invoice him. If you are going to receive cash right away, you may go a sales receipt. So that's how you enter the new transaction. You just pick it from the list. You can also use the new icon button here. Simply hit new and then pick which one that you want. We'll be going over invoice for credit sales. And then when you receive payment, right, on the invoice, so we'll be going over that. This is sales receipt is for cash sales. And then something that we're not going to do in this chapter is credit memo. Let's say that your customer returns a product or you're going to give them an allowance. So you would use a credit memo here, okay? You can also use the workspace. That's on the dashboard. So you go dashboard and make sure you're on get things done. And here you can send your invoices and receive payments. You can also add to your product and services list, or even manage your customers, add, change, or delete customers here, okay? So these are the types of transactions that we can do. We talked about them. Again, invoice for credit sales, sales receipt for cash sales, and then anytime we receive a payment, like for a customer from an invoice, we receive payments. Those are the ones that we're going to kind of focus in on today. Now, the customer list collects information about customers so we can use the information without re-entering it. So when you are in an invoice form and you choose a customer, things will automatically pop into the form. For instance, the billing address and the terms, usually like 210 net 30. So you don't have to keep re-entering the same information all the time. You enter it once in your customer list, and then it will populate when you use some of the forms. Now, you can update your customer list before entering the transactions, or you can do it on the fly, which means while you're entering a transaction. Okay. For instance, like you want to invoice a customer and you realize, hey, wow, this customer is not on my customer list. Well, while you're in the invoice form, you can add your customer. Okay. So here, to get to the customer list, we go to on the dashboard, sales, go to the customer tab, and this is it. So let's say if you wanted to add a customer, you would just go new customer. That's all you would do. So once you start to add a new customer, this is what your book says that the customer form, looks like. And, you have your name and phone number. And then you have these tabs down here. So you can enter in, well, the preferred method of payment, like this customer, Sherry Brian, Brian, likes to pay by credit card. So you put that in. Notice here you put in the terms due on receipt. It could be also like 210 net 30. But by doing this here at the customer list level, when you actually invoice Sherry, all this information is going to pop up automatically. Now, I will tell you that QuickBooks looks a little bit different than what the book shows you here. And actually, it's simpler. But let me show you what it looks like. Now, you can simply just scroll down to the different parts of that you want to enter your information, right? So this is the name and contact. You'll put in the name and the phone number and the like. And then if you wanted to just scroll down, you can, or you can use these buttons here to advance to the next section. In this case, it's addresses. So here, when you hit that, it goes down to the address, and you can put in your customer's billing address. That's kind of nice. And the shipping is going to be the same as the billing address. You can do that. It's kind of nice. And then also we have this payments button here too. Now, you don't have to use these buttons. You could just simply scroll down, but it's kind of fast if you wanted to use them. So in the payments button, it allows you to put in the primary payment method like credit card or by check, whatever that customer likes to do. Due on receipt. Again, what does that mean? That means when the customer receives the invoice, it's due right now. You don't give them like 10 days to a discount or 30 days to pay. As soon as they receive it, they need to pay you. Okay. Usually it'd be like 210 net 30 or something like that. Okay. But that's what it kind of looks like. It's actually easier than the way they had it before. All right. In section 5-5, we talk about projects, and it's a nice feature. I wasn't used to it. until now. The desktop version, I didn't see it, but it's easy to use. And what it does, it permits us to set up projects linked to customers. So in our example, we have our customers, and then we have our customer pets, right? So let's say down here, we want to set up a project for Sandy Copper's pet named Remy, okay? So Remy is a project. So we can use projects to track the profitability of, Remy, all the services that we provide Remy, okay? It provides us with better decision-making, right? Now we're going to use projects. It's interesting. They say you can use sub-accounts linked to a customer, or use projects linked to a customer. And in the book, they say we choose to do projects linked to a customer. Now, they don't tell us why, and so we're just going to have to run with it. So we are going to set up projects for our customers' pets. And you can see, to get to it, you just go on the navigation bar, just go projects. And then if you want to add one, just add project. Now, this is a good video to watch. So before you start a project, you can watch the video. I did, and I liked it, right? Now, what you're going to do in the chapter is you're going to add Maggie, which is Sherry Brian's pet, as a project. And you're also going to convert Kuno and Remy to projects. Now, before you set up Kuno and Remy as sub accounts, right? You had the owner, and then you had the owner was the customer, and then you had sub accounts for the pet. In this case, sub account for Kuno and sub account for Remy. Well, you're just going to convert those sub customers into projects, and you can read all about it on page 242. Okay, let's go ahead and start talking about products and services lists. The products and services list collects information about the products and services sold to customers. So there are 4 types: inventory, non-inventory, service, and bundle. Now, to get to your products and services list, you go to sales in the navigation bar, and then choose products and services tab. And if you wanted to add an item, you would just go new. Okay, now let me explain a little bit about these 4 and what they are. You have a choice of inventory, non-inventory, service, and bundle. Inventory is when you sell a product that, so you track that inventory coming in, you bought it, right? But you also track it going out. So when you have an inventory item like this, you need to assign it a sales account, but also you need to assign it an inventory account, because when it comes in, you're going to be debiting inventory. And then you need a cost of goods sold account to account for it going out, right? Then we have this thing called non-inventory item. Now, these are products that you buy and sell, but you don't need to track. So you don't need to set up an inventory account and a cost of goods sold account, but you can still bill these non-inventory items to your customer. I have a student that has a husband who lays flooring. And so she was asking me, well, how would you do this? How would I set this up for my husband? Well, he's a service, right? So he's probably going to be like a service business, and he doesn't need to track inventory. What he'll do is he'll buy the flooring, and he'll treat it as a non-inventory item, and then he'll just bill that to his customer. Okay, but you don't need the inventory count, and you don't need cost of goods sold, because you're not going to track it coming in and going out. Well, I guess you'll track it coming in, right? Because you're going to put it in, but you won't track it going out with cost of goods sold. All right. Service. That's just you provide a service, like you mowed a guy's lawn, or your CPA, you prepared a tax return. Notice here that we're creating a service called on-site vet service, right? So we choose service, and we put the name in, on-site vet service. And then if there's a SKU code, a scanning code, you put it in. We're going to leave it blank. Also, there's a place to put a picture describing the service. Well, you're going to leave that blank too. You will put in a category as pet wellness. You'll put in, yes, I sell this product and service to my customers. So check that. And then you'll put in, well, what's the description of the service, which is vet service provided on site. You'll need to put in a rate. So you're going to charge $150 an hour. Okay. And when you do earn this, it's going to go to the sales account, 4,200. Now, notice that this is a service, so we don't have an inventory account or a cost of goods sold account. Okay, so when we do inventory, we're going to have some more fields. We'll have one, not only the income account, we'll have the inventory account that it's going to hit, and also the cost of goods sold account when we sell it, where it's going to hit. Right now, we're just doing the service. It's just the sales. Okay, and then just hit save and close, and you're good to go. There are two main ways to record customers and sales transactions in QuickBooks. One is using sales receipts. When you think of sales receipts, you think cash sales. The other one is invoices. And when you use that form, you think credit sales. You're going to invoice the customer, and your customer will pay you later, right? So sales receipts, cash sales, invoices, credit sales. All right, so let's talk about how to do a sales receipt. Well, sales receipt is a cash sale. To get to sales receipt, just go ahead and hit the new icon button and choose sales receipt. And that's when you're going to, enter in what you sold them and, what kind of payment you received. And because it's a cash, sale, you need to get it into the bank. So you're going to march down the bank and put it into the bank deposit. And I'll explain that next. Okay. Okay. So remember, sales receipt is for cash sales. So when we do this, there's two ways of doing it. Let's do number one, this top illustration here, top row. Notice that when we use a sales receipt, what's happening is we are recording our sales and that we're receiving cash, or it guess it could be credit card, but in this example, it's going to be the checking account. Now, you can deposit this check immediately into the bank, right? So that's why doing it this way, if you say deposit to checking account, it's going to debit checking account and credit sales. Okay. Now that's this one here. It goes from sales receipt and goes directly into the checking account. There's another way of doing it. It's more representative of what really happens, right? Instead, when you do sales receipt, you're going to record the sale, and then you're going to put it into undeposited funds, right? You're not going to put it to checking account. You're going to put it into undeposited funds. Now, why? Because really you have the check, but it's not in the bank yet. It's undeposited, right? So we'll first put it in undeposited funds. And then when we march it, the checks to the bank, we'll take it out of undeposited funds and put it in the checking account. Now, I'll let you know that there was just an update, and this undeposited funds is called payments to deposit. So this is what your book says, and I wish it's just a little more confusing, but just remember, undeposited funds is the old term. The new term is payments to deposit, and that's what it's descriptive. I think I like the description. Payments to deposit. You have the checks, but you haven't deposited yet. So then when you do, you march it down to the bank and you take it out of payments to deposit and get rid of that and put it in the checking account, in the actual bank account. Okay. Let's talk about actually doing a sales receipt. Here we go. You're going to hit the new icon button, hit sales receipt. And here it is. So how do we fill this form out? We put in the customer. In this case, it's Sherry Bryan's Maggie, right? And we're going to put in the date of the cash sale, which is January 18, 2023. Then we got to put, well, how are we getting paid? In this case, it's by check. I guess they could pay by credit card, but in this chapter, they're keeping it to check. I guess that's simpler. And the reference would be the check number. So it's a check number 1800. Notice here that where are we depositing this to? I mean, we could go for the Gusco and put it into our checking account and it's all done, but that's not really what's going on, because you're not really putting it in the bank account. So this is really more descriptive by depositing it to undeposited funds. Now that's called now payments to deposit. That's what you'll put when you do it, payments to deposit. And that is really descriptive of what's happening. You receive the check, but it's not in the bank yet. It's a payment to deposit later. So that's what we're doing. Okay. So next we have to say, well, why did we earn it? And what did we earn? We provided, in this case, pet care, a short visit. So you will enter that. Now, when you do that, some things will come up automatically, like this description. Why would it come up automatically? Because when you set up this short visit service, you added the description to it. So that should pop up automatically. Then you need to put in the quantity. Well, that will pop up because you got to say, well, how many hours is it? It's 2 hours. So put in 2. This rate, it's going to pop up automatically because when you set up this service, you said you're going to charge $40 an hour. So that will be automatic. And your amount should be automatic. Why? Because QuickBooks is going to calculate 2 hours at $40 an hour is $80. So that the total amount of your invoice is $80. Now, if you want to display a message on the sales receipt, you can do so. You put down like, hey, I enjoy working with you. Thank you for being a customer. I like this attachment. If there's any source document that supports this transaction, you can put it here. Man, that makes it so convenient because you could go back and say, well, what's this all about? If you had a source document, any thing that backs this transaction up, you would put it there. As an auditor, that's a godsend, man. That's good. You don't have to look it up. It's right there. Okay, go ahead and hit save. Now, what behind the scenes, what is the journal entry? Well, it's a sales receipt, so it's a cash sale. So you're going to credit sales. What's the debit to? Well, in this case, we're going to put it to, it used to be undeposited funds. We're going to put it to payments to deposit. So debit payments to deposit, credit sales. Now, you could because we're doing it to payments to deposit, we're going to have to make a separate bank deposit, right? But so if you went and said deposited to checking account 1001, you could circumvent that step. But really doing it this way, putting in payments to deposit here is really what's going on, right? Because you just received the check. It's not in your checking account yet, so why would you put checking account here? It's easier, it's faster, but it's not as descriptive. So remember, and it'll tell you when to do this and when not to. This could change. It's going to be payments to deposit, or it's going to be check count 1001, I think. Okay. So I just told you that behind the scenes in this form, that the debit's going to be to payments to deposit, and the credit is to sales. Well, you can see it for yourself. Go to your transaction journal. You would go to More, Transaction Journal, and you can see that you're debiting undeposited funds and crediting sales. In your case, it's going to be different. Matter of fact, I think I even showed you what it's going to be. Yours is going to look like this: debit, payments to deposit, and credit sales. Now, later, we're going to have to deposit that check, right? Because you're holding it, but it's not in the bank yet. So we're going to do that next. We're going to create a bank deposit to actually march that check down to the bank and put it into your bank account. That's what we'll do next. Now, how do we create a bank deposit? Hit New, and then Bank Deposit. This will pop up. So how do you make this bank deposit? Well, first off, you got to know and tell QuickBooks what account you're depositing into. Make sure that it's the right one. In this case, it's checking account 1001. You're going to put in the date of the deposit, which happens to be January 18, 2023. And then here, select the payments included in this deposit. Anytime that you use that, payments to deposit thing, when the QuickBooks knows that you've got money and checks that are on hand at your business, but you haven't marched it down to the bank yet, it keeps track of that. So it'll say, well, which ones do you want to include? Well, the only one that we have is Sherry Bryan's Maggie. So we're going to select that, right? And we'll make sure that QuickBooks knows that we're depositing a check, right? So this will come up automatically, because when we click that, it knows that we have that check from Sherry Bryan of $80. So that's our total. Now here, if there was something else that you needed to add to this deposit, for instance, let's say that you were the owner of Mookie and you wanted to invest more money into the business, you could do it down here, right? But in this chapter, you don't do any of that. We're going to stay up here. So don't worry about adding other amounts to this deposit. We're just going to deposit that payments to deposit amount. Okay, hit save and close. So again, when we do this, we're moving that payments to deposit, we're getting rid of it and putting it in to the checking account, right? That's what we did here. We're taking it out of payments to deposit and putting it into the checking account. Well, what does that look like? Go to your transaction journal, and here it is. Debit checking, $80. Credit undeposited funds. Remember, this is what the book looks like, but our account is going to be payments to deposit, right? 1,600 payments to deposit. The next transaction that we're going to do is using the invoices form. And this is for a credit sale. You know, we're going to use the invoice when the product or service is given to the customer and the customer will pay it later, right? So when we do that, the flow of everything is going to be this, right? We're going to hit new, and then we're going to, you know, create the invoice, and we'll give the invoice to the customer as a bill. Later, then he's going to pay us, and we're going to use receive payment to accept that payment from the invoice. Now, again, we have this, let's say this check, and we have it, but it's going to be put into payments to deposit. So at a certain point, we need to march that check that we're holding and put it into the bank. And so that's where we'll go to for making a bank deposit. Okay. So this is the same idea I was telling you before. There's two ways of recording the receipt of payment, right? So let's look at the flow here. No matter what, let's do number one. What you're going to do is you're going to invoice your customer. So that's going to create debit accounts receivable and credit sales. Well, then 30 days later, let's say your customer is paying you what he owes you. So then when you do receive payment, it's going to be credit accounts receivable. Why? Because if he pays you, he doesn't owe you as much anymore. Now, the thing is, if you put deposited to the checking account, then the check automatically goes into the bank, right? And you're done. But the thing is, you really haven't done that because you haven't marched it down to the bank yet, correct? So it's probably better to do it this way, where you'll invoice the customer, okay, create the receivable and the sales, and then when you receive payment, he doesn't owe you as much anymore, so credit accounts receivable, and we'll put it to undeposited funds. That's what this is. Remember, undeposited funds is now payments to deposit. I can't wait till the author updates the textbook and I don't have to explain this time and time again. But anyway, yeah, that's what that is. So now you're holding this guy's check, right? Or this person's check. And now you need to march it to the bank to make a bank deposit. So that's what you do. So you take it out of undeposited funds and put it in your checking account. Okay. Again, undeposited funds is payments to deposit. Okay, let's go ahead and go through it. How do you create an invoice? New invoice. How easy that is. I love this. Now, for the invoice, well, who's the customer? In this case, it's for Remy, you know, Sandy Copper, Remy. Okay. And what will happen is if you did it correctly with all of the information, some of the things will pop up automatically. So like the terms, net 30, it should be put in your customer list ahead of time. And if you do, when you pull up this invoice form and you choose Remy, that the terms will come up automatically. Now, you need to put in the invoice date, which is January 18, 2023. And this is the cool part. When is it due? Well, this will populate automatically. Why? because you told it that the terms are net 30 and the invoice date is 1/18. So what is 30 days from 1/18? Well, it's 2/17. Okay, so that will populate automatically for you. And also, I think the invoice number it'll take the next available invoice number. All right. Now, so you know that it's an invoice. We're going to be debiting accounts receivable. Well, why? Why does he owe us? Well, because we're earning some revenue from our service, and specifically, it's for a vet visit. So when you choose vet visit, this description should come up automatically. Why? Because when you set that up in the product service list, you actually gave a description of what a vet visit is. Okay, so that will come up automatically. You'll have to put in the quantity. So here, we're billing Remy 1 hour of service. And this rate, $130, that's going to be automatic as well. Why? Because we put that rate in our product and services list. It's part of that vet visit. That will come up automatically. So then the amount will be automatic as well, because QuickBooks is going to multiply quantity of 1 times the rate of 130, which will be 130. So the total amount of our invoice is $130. Now, remember, by definition, an invoice form is to record a credit sale, right? So this form is going to generate this journal entry: debit accounts receivable and credit sales. And specifically what sales? That's going to be vet visit. Now, see for yourself. If you look and you go to the invoice transaction journal, you'll see that it's debit accounts receivable, $130. Credit sales, $130. Okay, good. Now, when we build our customer with invoice, now our customer is going to pay us. There are 3 locations that you can use to receive payments. You can use the new icon button. I love that because it's simple. You can go to the navigation bar and select sales. You can also go to navigation bar and select projects. Now, the author wants you to get used to the idea of projects. So you're going to be using projects to receive money from Remy, right? You can read all about it on page 268. So what are we going to do? We're going to click on projects. Then we're going to select Remy. And then we need to find out, well, add to project, what are we doing? We're receiving a payment. Okay, so you click on that, and then this will happen. The receive payment screen will come up. And I think this should already self-populate because we chose Remy. And you need to put in the payment date and the payment method. In this case, Remy is going to pay by credit card. And notice this time, we're not going to go, deposit to payments to deposit. We're just going to do it the easy way and put it to the checking account. That means we don't have to actually march down to the deposit, and then make a separate, bank deposit in QuickBooks. It's just, I'm used to doing it the other way. I like the physical flow of doing payments to deposit because I've got the check, but I know it's not in the bank. When you do it this way, it goes into the bank, but you still have it at your business. But that's okay. There's 2 ways of doing it, and if you use this, it's your business. If that's what you want to do, it can be correct. You can do it this way if you want. But anyway, you choose checking, and then, well, which invoice is this payment paying? Well, we're paying invoice 1004, right? And so you check mark it, right? So there it is. We know that this payment is $130 and we are good. So what does this screen do? Then because you know it's a received payment and you did deposited to, it's going to be debit, the checking account, and credit accounts receivable, right? That's how it kind of works. All right. And at the end of the chapter, on sections 5.10, accounting essentials, it just gives you some insight into the accounting theory related to receivables, because you know the sales system is related to accounts receivable. When we do the vendors next time, that's going to be accounts payable. But so this is accounts receivable. One thing that's kind of cool to remember, one of the most powerful reports that you can use to track your receivables and see how things are going is the accounts receivable aging report. And that report shows how much each customer owes you. And it will age the receivables to see if any of the customer invoices are behind, they're late, right? Well, I think if it's in the current column, that's cool. But all of a sudden you say, hey, wait a minute, man, this guy owes me money and he's 120 days past due. For managers, this is a powerful report because you want to be able to collect your money. You know that the longer you wait to get your money, the less likely that you're going to collect. Okay. So anyway, you can read about that. And like always, there are some supplementary videos that you can avail yourself to. You can see them on the website, My QuickBooks Online. I also put them in the chapter module. So for all these extra videos that the publisher offers, I put them in the chapter 5 module. Okay, so that's it. All right, that should do it for me for chapter 5. So I'm going to stop the share. Okay, guys, happy studying. Bye-bye.